everybody, welcome once again. We are meeting here for class 12 and you are watching my channel Krishna Singh Deo. Students, we are doing for class 12 issue of debentures chapter, and in today's class we are going to understand how to pass the entries for issue of debenture along with the interest entries. Yes, interest entries are passed in two parts. One, along with TDS. TDS means tax deducted at source, and without TDS. Both type of entries, the concept of entries and how to pass the journal entries, this we are going to learn in today's video. Let's get started. So let's understand how interest on debenture entries are passed. First of all, interest on debenture is a charge against profit. Means what is prefix in front of debenture's name? Let's say 10% debenture. If there are 10% debenture, let's say 10,000 debentures. For understanding, I'm taking 10,000 debentures of rupees 100 each. So this 10%, which is the prefix of the name of debenture, is the rate of interest, which is a charge against profit. Charge against profit means whether company earns profit or it does not earn profit, it has to pay the interest on debenture because it's a permanent liability on the company or a fixed obligation which has to be fulfilled. What is the amount of interest? The yearly amount of interest is going to be 10,000 number of debenture multiplied by 100, means it is going to be 1 lakh rupees. 10 lakh rupees into 10%. 10 lakh into 10% is rupees 1 lakh. Rupees 1 lakh is the number amount of interest to be paid in year. Company can give this interest on debenture into two parts, means 6 monthly and 6 monthly. Normally one is given on 31st of September and another part is given on 31st of March, or any other bifurcation can be there. So company can pay the interest on debenture 2 times in a year. So obviously this 1 lakh will be distributed into two parts, 50,000 and 50,000. And if company wants, they can give the interest on debenture only once in a year also. Depending on the policy of company, we will have to find out how to pass the journal entry, and where it will be written. Obviously it will be written in the question. We won't have to do anything separately. So we are saying what is the entry for interest on debenture. So let's say we are doing it in two parts. So 31st of September or 1st of October. Let me take 1st of October. September is actually 30th of September. I have written by mistake 31st. So 1st of October or 30th of September, both are same. First entry will be passed. Interest on debenture. Interest on debenture, since it is an expense account, that is why it will be debited. Interest on debenture account debit to debenture holders. Yes, why? Because we are making a liability or creating a liability. We have to pay this amount to the debenture holders, and this amount is 50,000 rupees which we have to pay to the debenture holders. Now on the same date, if payment is made, the entry is going to be debenture holders account debit, debenture holders account debit to cashier bank. Normally it is paid through bank only. So bank account 50,000 rupees. Now what is happening? This is half of the interest on debenture paid on 1st of October. Remaining half is still left. So same entries will be passed. These are twin entries. It will be passed on 31st of March also. Again the same entry, everything same entry and the amount as well. Interest on debenture account debit. Since interest on debenture is an expense, to liability. What new liability we are creating? We are creating debenture holders account. Debenture holders account will be credited with same amount, 50,000 rupees. So this is another entry. Obviously this has to be paid also to debenture holders. So here we are going to write debenture holders account debit to bank account. We have paid them interest in 2 times. This is 50 and 50. Now what is going to be closed over here? This is interest on debenture without tax deducted at source. Now what is interest on debenture account? You see that debenture holders account opened and closed in both the cases. It was credited first and then debited. Here also it was credited and debited. But interest on debenture account is still open. So all the accounts should be closed at the year end. So what are we going to do now? We are going to write down the entry for closing this account, and which is also technically called writing off. So writing off of discount interest on issue of debenture, interest on debenture account will be written off from statement of profit and loss. So entry is going to be statement of profit and loss, and this entry will be passed only once on 31st of March, means when we are giving interest on debenture on 1st of October, at that time this entry will not be passed, only at the year end you are going to pass this entry. So entry is statement of profit and loss account debit to interest on debenture. Now be careful over here, interest on debenture account was debited 2 times, both times with 50,000 rupees. So while closing it, we have to credit it with 1 lakh rupees, not with 50,000 rupees, because only one time's amount was 50,000 rupees. The amount of both the times together is 1 lakh rupees. So this is issue of debenture with interest, and how to open the interest account and close the interest account we have seen. What do we do? First of all, we take interest on debenture to debenture holder, we create a liability and we note down the expense, then we pay off this liability both the times on different dates, and then we close down the interest on debenture, means expense account is written off from statement of profit and loss. This is interest on debenture without tax deducted at source. What is TDS? Let us understand that first of all. So TDS means what? TDS means tax deducted at source. Let me write tax deducted at source. Tax deducted at source means what? See, all the debenture holders have to pay tax on the interest income which they are receiving from the companies. Now, from the government's point of view, if we think government will find it difficult to catch hold of so many debenture holders and pay them the interest, charge them the tax, then government does one very smart thing. Government tells the companies that, see, companies, before giving interest to the debenture holder, you deduct the tax yourself and give us that tax. So obviously, as compared to the number of debenture holder, the number of companies are going to be lesser in number. So government or the tax department can catch hold of the companies more easier than catching hold of each debenture holder. So this system is being followed in our country, where the companies are asked to deduct the tax at source, and this tax deducted at source the companies cannot keep in their own pocket. They have to give it to the government. So what is the entries if the tax deducted at source is also there? Let us take in the previous example. If 10% debenture was there, 10% debenture was there, 10,000 debenture at the rate of rupees 100 each, and TDS is also given. We cannot assume any rate of TDS. Question will give us TDS is 10%, let's say. So how the entries are going to be passed this time? Let's see. First entry is going to be interest on debenture account debit, as we have done in the previous one also. So since it is given twice, interest on debenture account will be debited with 50,000 rupees. Now, but here what is happening? Be very careful. Debenture holder is not getting all 50,000 rupees. The debenture holder is going to get only 90% of 50,000. Why? Because 10% is going to government as the form in the form of tax. So debenture holders account will be credited with 45,000, and to TDS payable. What is TDS payable? This is the amount which the company has to pay to the government, will be credited with 5,000. For company, this is a liability. That is why company is writing it over here, 10% of 50,000 rupees. While closing this account also, means while making the payment also, company will pay only 45,000 to the debenture holder, and remaining will go to the government's account. So how the entry is going to be passed? Entry will be debenture holders account debit, TDS payable account to be also debited, TDS payable account debit to bank. Means from company's pocket all 50,000 rupees is going, but out of this 5,000 is reaching to the government, and remaining 45,000 is reaching to the debenture holder. Same set of entry will be passed on 31st. This was 1st of October. I have written number 1 and 2 by mistake. So I'll just erase number 1 and 2, and I'll write down the date over here. Same date is copied below also, and on 31st of March, same entries are going to be passed. Interest on debenture, account will be debited, debenture holders and to TDS payable. Same amount. Everything is going to be same. 50,000 rupees is interest on debenture. Out of that, 45,000 is reaching to the debenture holder and 5,000 is going to the government's account. And when we make the payment, both these accounts which are being credited will be debited. So it's going to be debenture holders account debit, TDS payable account debit, to bank. Debenture holders are getting 45,000. They are getting 5,000 and these people are getting 50,000. Now the next entry will be on 31st of March. On 31st of March, we are closing the interest on debenture account like in the previous case. TDS payable is opened and closed already. So here we are going to pass the entry statement of P&L debit to interest on debenture with 1 lakh rupees. I hope this is clear to all of you students, where we have passed the entries with the TDS payable and without TDS also. Let us have a recap of the entries what we have passed regarding the TDS. Let's see what entries did we pass. For TDS, we have passed entries interest on debenture account debit to TDS payable to debenture holders accounts. Whatever was the amount of TDS that is being deducted from the debenture holders payment, and remaining amount means they are getting only the remainder. Then while closing this entry, what we'll do, we will pay one part of this to the debenture holder and one part of this to the government as TDS payable. So out of 50,000, 10% is paid to the government and remaining 90% is paid to the debenture holders. Then we have passed the same two entries once again on 31st of March, and at the end on 31st of March, when we have passed the closing entry, this closing entry is for closing the interest on debenture account with this written off from statement of profit and loss. So statement of profit and loss account is debited to interest on debenture account. So this is very simple. This can come as a standalone question or this can be a part of big question as well. You have to revise this concept properly, students. We will meet once again in the coming class and we will solve a question based on this. Till then, bye. Have a great day. And yes, don't forget to subscribe our channel if you have not yet subscribed, and press the bell icon as well. Bye.